Well, let's welcome on board our first guest for today. We have with us Mayur Shah of EY. He's joining us on the show to talk about, well, what exactly are, is it about advanced tax that all individuals need to know about? Many of us may not even be aware of this concept of advanced tax, especially if you're salaried, but it's almost everyone out there who may be liable to pay advanced tax. Let's put it this way, that if you have, if you're earning money, and if you have a certain amount of income that you're earning, then you are liable to pay advanced tax. Mayur Shah joins us now on the show to talk about this. Mayur, hi, good evening. Thanks so much for joining us today on the show. Well, let's now first up talk about the importance of payment of advanced tax, and who is it then, Mayur, who is liable to pay this?
Hi, good evening. So the advance tax is tax liability which a person needs to pay during the year when they are earning the income. Now, who is required to pay tax depends upon what is the total tax liability which a person has to pay to the Indian government on an annual basis. If the tax liability is above 10,000, after deducting TDS and TCS, in that situation, he is liable to pay advance tax in the installment, and there are 4 installments which a person needs to pay. Failing to pay advance tax, the person would be liable to pay interest. There are 2 sections under which the person has to pay interest, and those are at the rate of 1% per month. Interest will be levied on the person. Now, there are also exceptions to the payment of advance tax. A senior citizen who is above the age of 60, and if that person is not earning any business income, then he does not have to pay any advance tax. Second exception in payment of advance tax by installment is in relation to the person who is having business income or a professional income, but is being taxed on a presumptive basis. In that situation, the person is required to pay advance tax only for the last installment, and first 3 installment he does not have to pay. So that is how the advance tax will have to be paid by the person.
Advance tax, as the name suggests, Mayur, is it involves essentially estimating what your income will be, and then prepaying a part of it in a way. So how should one calculate advance tax, Mayur? What should be the starting point?
So starting point would be that to estimate, one has to consider what was the income which was earned last year, what are the likely income which will continue in this year, and what are the additional income which is going to arise in this year. Basis which one has to derive what is the total income coming to, and from there you can deduct whatever items, such as if investment is made in PPF, PF, then you can claim deductions under Chapter 6A called LIC. If you have paid mediclaim insurance, in that case that can also be deducted. Likewise, you have to look at what all deductions you can claim. Basis that then you have to arrive at what is your total income on which you have to pay tax. Segregate that income into income which is taxed at a special rates, or one which is taxable at a normal rate. And accordingly, applying those tax rates, including surcharge and education cess as the case may be, arrive at a total value of tax which needs to be paid. From that, one can deduct TDS which has already been paid, or TCS which has already been collected. And if a person is entitled to any relief under double taxation avoidance agreement, if such a certain income is taxable in overseas jurisdiction, then claim those benefit and balance whatever is left. If that total tax liability is about 10,000, in that case, person has to pay advance tax. The first installment, which is coming on 5th June, that is tomorrow, by then person should have paid 15% of the total tax which has to be discharged by way of advance tax. Accordingly, then by 15th September, 45% of the total advance tax, less the advance tax which has already been paid, needs to be paid. And then by 15th December, 75% of the total advance tax should have been paid. including first two installment. And finally, on 15th of March, entire tax liability should have been discharged by then. So this is how the advance tax to be calculated and to be paid into the our Indian government treasury.
All right. So the question is now, Mayur, that would you in any way be, I mean, obviously there is a possibility that you may earn money later on as well, which you may not be knowing about now. Just to give you an example that, you had the intention of perhaps selling mutual funds or selling shares, and you're going to enjoy some capital gains, which may be, next quarter or the third quarter or however. How do you pay advance tax on that? Is that to be paid on an as is and when is realized basis? So, for example, if let's say I sell shares in August, so should I pay for that? Should I pay the tax on the capital gains that I enjoy on those shares in the September installment?
It's a very good question. So there are two exceptions while calculating the advance tax. One is capital gain and another one is dividend income. There are a couple of others, but which may not be very relevant. So I'm just discussing these two, and other ones are like winning from lottery or winning from any games, any income arising therefrom. So all this income, which is not subject to advance tax, if it is not being earned, because it is very difficult to estimate that what kind of income is person is going to earn. So if a person is earning income just before the first installment of advance tax, then all advance tax in that income needs to be considered for advance tax. Say if a person is earning capital gain while paying the third installment of advance tax, then first two installment he does not have to consider capital gain which was arose before the third installment of advance tax, and that has to be true up in the third and fourth installment of advance tax. Similarly, dividend income and all other income needs to be considered on the same basis, where advance tax needs to be paid for that income from the date when the income is earned, and thereafter whatever installment is due, basis which advance tax needs to be discharged.
Now, let's understand the repercussions of not paying advance tax. What is the penalty payable if, I miss paying the advance tax or I don't pay? This is still the first installment. So, can I cover up maybe in the, come 14 September or 15 September, which will then be the due date for the second installment of the advance tax?
You are absolutely right. So if by any chance I miss the payment of advance tax by 15th of June, which is where I have to pay 15% of the total tax which is liable to be paid, in that situation there will be levy of 1% per month. That means for 3 months I have to pay 3% on account of shortfall. However, if by 15th September if I deposit the entire tax, then on a going forward basis, I don't have to pay interest thereon. But if I miss that again, and the second installment, then again I have to pay additional 3% of interest on the advance tax shortfall, and it will continue so on and so forth. So you are right that one can catch up and do a true up, make the payment by 15th September or by 15th December or by 15th March. And accordingly, one needs to keep paying the advance tax. Now, let us assume that by 15th March, this person is not been able to pay the advance tax, but they can still do it by 31st of December by paying 1% interest on the shortfall. But if they miss to pay all advance tax altogether, in that case, apart from the interest on deferred payment of advance tax, after the end of the year, till the date of payment, the person needs to pay interest at the rate of 1% over and above what interest has to be calculated for deferred payment of advance tax. So there are two kinds of interest which will be levied. One, during the period during the tax year during which income is being earned, and after completion of tax year, there is another interest which will be paid, which will have to be paid by the taxpayer.
All right. Okay, well, there you have it. That's to do with advance tax, everything you need to know. Now, the question is making payment of advance tax. Remember that the Income Tax Department has launched a swanky new website. It promises to be more user-friendly. Mayur, if you've gone through the website, how do you go about then making payment of advance tax using this website?
It's very easy and it's very effectively it can be used. It provides the link. Where you can go to the income tax website online service .in.egovnsdl.com. It's a big name, but one can flash it on the screen. However, once you click on that, you need to just proceed with challan number 280. Once you click on the challan number 280, what you need to put is your name, type whatever amount you have to pay, mode of payment. You have to just put in a PAN number and the challan will be ready. Generally, what we do is we go to any bank, if we have an internet banking, we go to the bank site, just click on that, put the name, PAN number and assessment here, and you can put the amount and it automatically gets paid online. It doesn't take more than 5 minutes to make the payment of, installment. The key aspect to note is that, you should put correct PAN number, correct assessment here. If you don't do that, then there is going to be a challenge. And while selecting the challan, you need to make sure that you are selecting challan number 280. If you select any other challan, then that will not be treated as an advance tax and it can get into different challenges.
All right. Okay, so that's the A to Z of advance tax payment. Ladies and gentlemen, get straight to it because, come 15th of June, there's a deadline for the payment of the first installment of, FY22's advance tax. Okay, very quickly, let's take on board our questions and queries. We have Sumit Deb asking a very relevant question. He says, what should I do if the income given on the form 26AS doesn't match my details? I think when he says my details, he means that maybe the income that he has calculated or that he has received. He says, my professional fees as per form 26AS is 7.5 lakhs, but I have received 5.5 lakhs. Well, I suppose this is not a new question, Mayur. We've had a lot of assessees facing this problem where, they believe that the income or the details given in Form 26AS doesn't match what, they've actually got in their hands. So in such a situation, Mayur, what should they do? Do they have to strictly follow only Form 26AS, when filing their return? Because, return filing as well will come up in September.
Sure. So, there are two situations under which this discrepancy comes out. One is where a assessee or a taxpayer follows cash basis of taxation. In that case, he has to offer income which is received as per the example or as per the query, 5,50,000. But if he is following mercantile system of taxation, in that case, he has to offer 7.5 lakh. Possibly that is what has been accounted by the his or her client, and accordingly that income needs to be offered to tax. Now 26As and the returned income may be different. In that situation, the explanation may be requested by the tax authority why there is a difference. One has to keep the reconciliation ready. As and when it is demanded, the reconciliation statement can be submitted. Why there is a difference between 26As and what has been offered to tax. Now, if the payer of the income has made any mistake, then one has to request the payer company to rectify that error. Otherwise, tax office will go ahead with the income being 7.5 lakh in the given circumstances. So whatever has been reported in 26AS, they will consider that, and this matter will be then litigated unless the taxpayer is able to demonstrate the actual income earned by him from this client is only 5.5 lakh and not what has been reported in Form 26AS.
All right. Okay, there you have it. That's, to do with what to do when, the details in Form 26AS and what you've got, is not the same. Another interesting question from Mithali. She asks, how do you calculate tax when you are doing an SWP? Now, as we know, an SWP, a systematic withdrawal plan, is is exactly what it does. It essentially slowly withdraws money from mutual funds when your goal is approaching, or when your goal is already here, but you don't want to remove money altogether. You slowly start removing it. So it's basically the opposite of an SIP. But this is tricky, right, Mayur? How do you calculate your capital gains on this?
Yeah, see, in this situation, as we have said, there is an exemption for capital gain. So in the month, when you know that this much is the capital gain which you are going to realize, that you have to consider for that quarter, and for the next quarter you have to, and then you have to pay installment only on that. Second thing is that in the second installment, so every month if you are withdrawing, or every quarter you are withdrawing, then you have to calculate capital gain only for that quarter, and then spread it over the balance installment which is due. Likewise, you have to keep doing this. So here, whether you are having a systematic withdrawal plan or otherwise, the capital gain will remain capital gain, and the advance tax needs to be paid thereon on that basis. Now, coming to one more thing which is very important, when you are having a systematic withdrawal plan, you also need to see that whether it is a debt fund, or is it hybrid or equity fund. If it is a debt fund, then long-term capital gain will become long-term capital gain only if it has been held for 36 months. So for each withdrawal, you need to check whether it qualifies for 36 months or not. And if it is a long-term capital gain, in that situation, it will be taxed with indexation at 20%. But if it is equity-oriented mutual fund, and if it is long-term, then the capital gain tax will be at the rate of 10% without indexation. And if it is short-term capital gain, then it has to be at the rate of 15%. So these few things needs to be noted when you are having a systematic withdrawal plan.
All right. Okay, I hope that gives you a bit of a guidance. Unfortunately, we are a little short on time, so we'll not be able to take on board any more tax-related questions. Don't fret. We'll be back with another session on this. But Mayur, thank you so much for taking our time today and joining us on The Money Show.